Have you ever wondered what a real dollar collapse would actually feel like day to day? Not as a headline, but as a reality. We're often told our financial system is robust, that it's resilient. But what if there are cracks forming just beneath the surface? Cracks that most people don't see. Welcome to the Bullion Signal Podcast. We're the channel that cuts through the noise to give you the bigger picture on macroeconomics, precious metals, and most importantly, how to protect your wealth in an uncertain world. If you're looking for clear, unfiltered analysis, make sure you subscribe because today we are diving deep into a very dramatic scenario, one that claims the entire system is on the verge of a catastrophic failure. The source material we're breaking down today comes from a channel called Capital Cycles, and they don't mince words. They start with a pretty explosive accusation. This isn't just a market forecast. They're essentially saying that the official story we're being told is a deliberate deception designed to hide a system that's already broken. Now, to be crystal clear, our goal here is not to stamp this theory as right or wrong. Our job is to act as your guide. We're going to deconstruct their argument piece by piece so you can follow their chain of logic and see exactly how they arrive at such a startling conclusion for December of 2025. All right, let's get right into the heart of their prediction. They've pinpointed a very specific time frame, December 2025. This, according to their thesis, is the moment of truth. It's when they believe the system doesn't just bend under pressure, it completely shatters. So, what does this breakdown look like? First, they predict the price of gold has gone absolutely vertical, hitting over $4,400 an ounce. Now, you have to understand, that's not just a new market high. That is a fundamental revaluation of gold against the US dollar, signaling a total loss of faith in the currency. And gold is definitely not the only story here. In their scenario, silver also makes an astronomical leap, blasting past all-time highs to hit $70 an ounce. But here's the thing. These shocking prices, they're just the symptoms. The real key to their entire argument is the reason they say this is happening. And this is the most critical distinction they make. They argue this is not another speculative frenzy like the dot-com bubble or cryptomania. They call it a bank run, but not on a bank. It's a bank run on physical metal, a global stampede by major players trying to get out of paper assets and into something real, something tangible before it's too late. So, what's the trigger? Where's the proof of this bank run? The source points to one single catastrophic event in the silver market. They paint a picture where, in the span of just 4 business days, a staggering 60% of all the registered physical silver is pulled out of the COMEX vaults. For them, this is the smoking gun, the undeniable signal that the paper promises are worthless and the game is over. Now, you might be asking, how could a crisis of this magnitude happen so incredibly fast? Well, their diagnosis is that the market enters what they call Phase C. Think of it as an acceleration phase where the normal, predictable behavior of markets is thrown right out the window. So what exactly is Phase C? It's their term for a moment when the financial world basically goes haywire. All the typical relationships that investors have relied on for decades, like stocks and bonds moving in opposite directions, they just stop working. It's a moment of pure chaos and unpredictability, where the old models completely fail. And this slide really highlights that breakdown perfectly. For as long as any of us can remember, the rule of thumb was simple. If the US dollar gets stronger, the price of gold goes down. But in this new reality they describe, that rule is obsolete. They argue that geopolitical forces, like the weaponization of the dollar through sanctions, have become infinitely more powerful, shattering that old correlation. Their entire argument for this acceleration phase really boils down to 2 core drivers. First, they talk about a monetary trap. This is the idea that central banks, especially the Fed, are stuck. They can't raise interest rates to fight inflation without imploding the economy because of the massive debt load. And second, a kinetic trigger. This is a real-world physical event, not a financial one, that lights the fuse. Think a major war, a supply chain collapse, something that forces nations to ditch paper for real hard assets. Now, to build their case, they look back at history, specifically to the famous silver squeeze in 1980. But here's the twist. They aren't arguing that history is repeating. They're arguing that today's situation is fundamentally different, and in their view, far, far more dangerous. And this table does a great job of breaking down why they believe it's so different. Back in 1980, the buyers were leveraged speculators, guys like the Hunt brothers. The Fed, under Paul Volcker, could crush that bubble by hiking interest rates to an unthinkable 20%. But in their 2025 scenario, the buyers are entirely different. They are sovereign nations, central banks, buying with cash. And in this future, the Fed isn't hiking, they're cutting rates, making them powerless to stop the run. So let's just pause on that because it's the absolute linchpin of their argument. The nature of the buyer changes the entire game. Unlike speculators who can be forced to sell through margin calls, sovereign nations buying physical metal with cash are, in their view, unshakable. They aren't trying to make a quick profit, they're trying to survive. They can't be forced out of their positions. Okay, let's zoom in on silver, because this theory presents it as the financial system's Achilles heel. They argue that silver is the epicenter of this coming crisis, all because of its incredibly unique and fragile market structure. Their analysis of silver begins with what they call the byproduct curse, and it's a huge problem. You see, almost 3/4 of all the silver that comes out of the ground each year isn't from silver mines. It's a byproduct from mining other industrial metals like copper, lead, and zinc. And what that means is, even if the price of silver goes to the moon, the supply can't just ramp up to meet that demand. It's inelastic. So at the exact same time you have this rigid, constrained supply, you have an explosion in demand from every direction. The source calls it an industrial vortex. You've got the green energy transition needing tons of it for solar panels. You have electrification needing it for EVs. You have global industry needing it for electronics, and all of them are competing against a surge in investor demand from people who are just trying to protect their savings. There simply is not enough to go around. So, after painting this incredibly bleak picture, a system failure, a supply crisis, a global bank run on metal, what's the solution? What's the takeaway? Their proposed strategy is not about investing for retirement, it's about survival. They call it building a financial ark. The metaphor here is incredibly simple, but really powerful. They say to imagine a massive financial flood is coming. In that flood, all your paper assets, your stocks, your bonds, even the cash in your bank account, they all sink. They become worthless. The only things that will float, the only things that will survive are physical, hard assets. And according to their thesis, this ark is built from only two key materials. First, you have gold, which they call the sovereign shield. Its job isn't to make you rich, its job is to ensure you don't become poor. It's your wealth insurance. Then you have silver, the speculative engine. This is the asset they believe has the explosive, asymmetric upside to actually build new wealth during the chaos. And this all leads to the single most important rule in their entire strategy. It's their non-negotiable principle. If you can't touch it, you don't own it. They argue that in a true crisis, any paper claim on metal, whether it's an ETF, a futures contract, or an unallocated account, will prove to be worthless. The only thing that counts is physical possession, completely outside the reach of the banking system. And that brings our deconstruction to a close. We've walked through the scenario, we've examined their diagnoses, and we've looked at their proposed arc for survival. At the end of the day, it leaves us with the most important question of all. After seeing how all the pieces of their argument fit together, do you view this as a credible warning about the very real fragility of our financial system, or do you see it as a compelling but ultimately fictional story? We leave that for you to decide. Thanks for joining us on the Bullion Signal Podcast. If you found this breakdown valuable, please hit that like button and share it with someone who needs to hear it. And make sure you're subscribed so you don't miss our next deep dive. Just a quick reminder, this content is for informational and educational purposes only. It is not financial or investment advice. You should always conduct your own research and consult with a professional before making any financial decisions. Stay safe and stay informed.